Cummins and myself, Curtis Pope. And it's always a treat when we have a guest on the show, and even a bigger treat to have Michele Cummins do one of her world-famous introductions. Michele, what have you got?
I am excited to introduce Jessica Oates. I mentioned her in the beginning. If you've been to my homepage, michellecummins.ca, you'll see her on my front page. I've got her link there, so you can instantly be approved for a mortgage. And she has agreed to come onto our show. And actually, she was here for our first segment, listening to me rattle off all the stats. I want to tell the audience a little bit about her before she comes on, and she's going to share a lot of good information with us. She is with Harmony Mortgages, division of Dominion Lending, and she's a mortgage broker, but she's also a mom of toddler twins. They're so adorable, and a working husband. And she's always available, and she's quick to answer. And so she can juggle a lot of things because she doesn't work typical banking hours either. She works and she does what she has to do, and she does what it takes to help her clients. So appreciating and understanding your time is very valuable to Jessica, and she knows that you have limited time to shop for a mortgage. And it takes a lot. You think it's going to be a lot, but she makes it simple and straightforward. So instead of going to various and a whole bunch of different, your bank and going in, she's just right there at your fingertips. Just give her a call, and she can help you out. So there's so many options for the market that may offer the best rate that she wants to give you, and you have to be careful because there may be hidden fees and unclear terms. And she wants to make sure she gets you the best rate, the most affordable rate, and best contract to be signing. So as a mortgage broker, her number one job is to find you that best rate. And she's helped many of my clients. And she specializes in first-time home buyers, and of course purchasing, in refinancing, and home equity loans. And her promise she has is that she works for you. And I've seen it hand in hand. And I wanted to share, because she has many 5-star Google reviews, but I wanted to share one with everyone. So this is from Jim Ryan, and he said she's positive, she's professional, she's quality service, and she's responsive, and she has the value is there. You don't pay for a mortgage broker either, so don't be confused about that. So in July, this is what he says. In July, we presented Jessica with a complex mortgage situation. Not only did she solve the situation, but she went above and beyond in making sure everything went smoothly. Jessica was always available, and he says, I mean always, to work through all of the issues we presented to her. And he's all, thank you. So through the seemingly endless request for paperwork, Jessica maintained a calm and positive demeanor. In the end, our mortgage was approved and our purchase went through. I do not know if we have been able to succeed without the efforts of Jessica. So that is such a nice review. And so, Jessica, thank you so much for coming on and sharing your wisdom with all of us.
Yes, thank you so much for having me. Your introductions are amazing, and I'm blushing pretty much head to toe right now. I'm not going to lie.
Well, I tell you, being a mom of twins, of toddlers, that is a full-time gig in itself.
They are a lot, but, they just turned 4 in December. They go to school during the week, and we try and get inside as much as possible to burn off their energy. But they're definitely the minions, I call them.
Well, we should probably get right to the questions here. And Jessica, I was going to ask you, the Bank of Canada raised their overnight rate. How does this affect someone who owns a home or is looking to buy a home?
So, yes, they did raise their overnight rate on Tuesday. March 2nd, so that would have been Wednesday. Bank of Canada raised their overnight rate from 0.25 to 0.5, which was expected. And unfortunately, this does affect our variable rate option. So our variable rate option is based off of prime minus or plus a certain percentage to get our rate. So technically speaking, prime prior to the raise was 2.45, and now prime is based off 2.7. So technically, if you had prime minus 1, previously you were at 1.45, and now your payment is going to be based off a rate of 1.7 due to the 2.7 prime we're now dealing with. But in most cases, the change in your payment is extremely small. Only about $12 on every $100,000 in mortgage you have, which, to put it into perspective, on the $500,000 mortgage, your payment's only going up by about $60 a month.
Okay, so that makes sense. Now, is a variable still a good option with the Bank of Canada rumored to be raising rates a few more times this year?
Yes, so it is still a very good option for most of our buyers and even someone looking to refinance for a couple of reasons. One, even with the rise in prime, when compared to our current fixed rate, you're still better off by about 1 to 1.5%. Currently, as fixed rates are also going up as well, we are seeing rises at least once a week for most of our standard lenders. And two, if you do break your mortgage inside a variable rate, you're only subject to a 3-month interest penalty instead of a IRD penalty, which is an interest rate differential penalty. This can end up saving the borrower about, could be a comparison of tens of thousands of dollars depending on how much their mortgage is that they're going to be breaking. The only time I don't recommend a variable rate for a client over a fixed rate is if a client has like an extremely fixed income where any fluctuations in payments could affect other parts of their budget, which is where we would have a discussion and break down all of their costs and probably end up going for a fixed rate payment.
So let's talk about down payments now, because is it a better option for someone looking to buy to have 20% down payment? And what are the rules around the down payment? Because I know certain price points you have to have at least 20% down.
Yeah, so we are seeing lots of people coming in that, they're so proud of themselves for saving their 20%. And unfortunately, they're being priced out of the market because they took extra time to save their down payment. So don't be scared of having less than 20% down. Under $1 million purchase, you don't need to have 20% down. So you can do a minimum of 5% down for any owner-occupied home. So that's the home you're going to be living in. Under $500,000, which is extremely hard to find right now. But over $500,000, but under $1 million, you only need 5% on the first $500,000 and then 10% of the difference. Once you do hit that $1 million mark and anything over, you would then need a minimum of 20% down payment. The only thing to really keep in mind, though, is like if you do have that less than 20% down payment, is that you will have an insured mortgage, which means that you will have a mortgage insurance premium added to your mortgage amount. And this is a way that our lenders are technically protecting themselves in case you were to go into default. All of the mortgages are insured. The only other problem that potential home buyers are running into, like I said, is that as they wait for that 20% down payment to be saved, now they can't afford to buy anything. So, if you have less than 20% down, definitely talk to your mortgage broker, your bank, find out your options, because you'd be surprised what comparing the two scenarios is, either waiting, spending more, or, saving under that 20% and getting that insured mortgage would cost you.
It's a thing of don't assume, don't wait and do this kind of thing because you think, oh, this is best. It's almost like when you're prepared to, you're going to sell your house, but you do a whole bunch of stuff before you talk to your mortgage broker, before you have your realtor come in and give you advice, I say, have your professionals give you advice first, then prepare, because there's a lot of things you don't know and that you wouldn't think about, such as that. So I wanted to ask, if someone is looking to buy a home this spring, which is just around the corner, and we're feeling it so far this Saturday, what things should and shouldn't they be doing right now?
So right away, I would say get pre-approved. Go to your bank, call your mortgage broker, call me, and let me get you pre-approved. Right now, we're holding pre-approval rates up to 120 days, which is putting us right into actually the beginning of July, which is crazy to think about. And with rates raising as quickly as they are, we want to make sure we're trying to save you the best rates so you can shop without worry or fear about rates all of a sudden rising dramatically on you and you're not going to be able to qualify at the new higher rate. It also lets us tell them about their maximum purchase price so they can shop properly within their budget, because we don't want obviously you to find a home of your dreams and then all of a sudden you can't actually qualify for it. Because when we do a qualification, we do base it on everything. We do income verification. We check all of your income documents. We do a credit check, which helps us pull and see what kind of debt load you have, which is huge too, because unfortunately, people take on debt. And when we do a pre-approval, one of the last things we tell you is don't take on any new debt until you buy a home, have the keys, and are standing in the front, the front entranceway, and you don't have to worry about the bank or the lender anymore. Because if you take on any new debt, that can throw out your entire application. So no new vehicles, credit cards, lines of credit. You can't co-sign any loans or mortgages for anyone else, because if you do and they default, you're on the hook for those. So, and technically speaking, we see a lot of people that do end up buying new vehicles when they come back to us and they wonder why they can't get their homes anymore. It's quite surprising, but remember that every $400 in car payments you have, you lose out on approximately $100,000 in mortgage funds. And that can make a huge difference when you're right on the line of getting approved or not, and a lender repull your credit. They can repull your credit pretty much the day before closing to confirm you've not taken on more debt. And they can shut down a deal in the last minute because you weren't honest with them, or you did buy a new vehicle, or you maxed out a credit card in the meantime.
Very cool. Now, is there anything else that anyone should know, about using a mortgage broker?
Well, the main thing is, and something Michelle already mentioned, is there is normally no cost to use a mortgage broker. We are compensated by the lenders who complete the mortgages for all standard lending. When we deal with alternative and private lenders, though, there is normally like a 1% to 2% fee based on the mortgage amount. So then they would be paying that directly to the lender. But for the most part, and the most standard lenders, for all of our big mortgages, you're not going to be seeing any sort of fee or any sort of payment that the person is going to be, paying to the mortgage broker or to the brokerage, even if they don't end up moving ahead. It all kind of just, skills and stops, and there's not somebody who may knock on your door looking for, a handout payment later. We do also offer a wide range of lending options, like I stated. So we've got standard, alternative, private, and reverse mortgages, which gives our borrowers lots of access and options in trying to figure out what their best rate plan is going to be. And the other bonus when you use a broker is you only have to fill in one application, submit one set of documents, and then the broker does all your shopping for you. We find different lender options, the best mortgage product, which will help support all of your short and long-term goals. Because really, at the end of the day, we want to make sure that you have the best product to suit your life and what the next, 5 years of your life is going to look like.
Well, thank you so much, Jessica. That was so much information. It was wonderful. I think our listeners might want to re-listen to this on our website or on our podcast next week when it comes out. But it'll be on Country 107.1's website today probably or this weekend. So first there and then our podcast on Tuesday. But thank you so much. Really appreciate it.